Okay. Cool. Everything is set. Phone on silent. So, the downfall of the market. We can see from a good supply zone. Nice. It's not nice, but yeah. Maybe today we'll go for the full short sell era. Aniket Rajkarni, Ram Aniket Rajkarni. Welcome to the live stream of the Cheesy platform. Thank you so much, everybody, for whoever are joining this live stream. Means a lot to us. So let's just get started with this. So hello, ladies and gentlemen. Please welcome to the brand new live stream of the Cheesy platform. And you all know my name is Yash, and I am your host for the crypto trading. I will take you to the far most difficult, yet I'll make it the most simplest. Okay, that you have to leave it on me, and you can just go and check out on my previous journey as well. I've made everything so simple for all of you guys so that you can understand this whole difficult world. Yes, the crypto world, the trading world, it's very difficult to understand because of there are so many of such words which can have the simplest version of it, but they still yet they use the difficult one only. Okay, so in that situation what happens is basically whenever you are entering in the crypto world, you are like, you have that much burden on you with those so many huge words. Those were like the stop loss, the liquidity, the equity, blah 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 blah. But they all have the most simplest meaning ever. You don't have to be afraid of those kind of meaning, because this is the first thing they hear. Because whenever you open any of those platforms, or you want to just go, okay, like just tell me about the trading from the beginner level, they will use this word. And in that, like the first step itself became such that thing. Okay, like what are we doing here? Like what is this words? Why I am listening? And when you don't understand some words, exactly at that point it becomes like your interest goes. So you don't have to worry about that, because if from this point, if you had that moments where your interest has gone and every of those things, trust me, on this one simple one pit stop platform, that is a Cheesybit and Zbit as well, you will find my whole journey where I've taken people from the beginner level to the most advanced level. Right now we are in that stage where we are every day we are analyzing market, making our skills analyze, sharpening it every day, because it's not like the trading is not like you learn something and that's it, you are the expert now. No, every day in the trading you might observe some new thing, because every day there are new people who are trading. Every day the mindset is different, every day is a different, like basically if you start with, every day is a different. Okay, so in the trading itself it will be the same exact thing, that every day will be very different. So right now we are in the most advanced level where we just come on the live chat. I will explain you some of the concepts, and then we will do the analysis of the market, and then we wait for finding the best buy or sell entry depending on whatever the market is going on right now. See, like for example, right now situation, we have clearly seen that the exact supply zone which I draw yesterday is working so fine right now that 2 times the market tried to go up from there, but it didn't let them to cross. So you see, this is what analyze makes you. Like this was planned yesterday, and right now the market is exactly in that situation. If I would have entered from that my specific zone, that demand zone which had a little downfall, but yeah, so many ads, little downfall, but again it came to my previous level itself. So if I could have entered at this position, I would have easily touched my target. That is a huge amount of target. Let's just see how much percentage is it from here to here. It is 2.37%. I could have achieved my target if I would have entered for a position or something. But yet, like before leaving my live stream yesterday, I told you that right now's market is a very unstable market. In an unstable market, I don't want to risk my entry in any positions, because when you know, see, like in the trading, more than your psychology, more than your knowledge, there is an instinct call as well. Like if you feel like most of the time the market tried to cross that supply zone but didn't, and it stayed at that one single point. It stayed at that point. Lot of time it tested, fall, tested, fall, tested, fall, tested, fall. All those things happen out there. It was just testing and falling, testing and falling. So you know that and yesterday as we did the analysis, we also found out one thing, that the buyer's pressure, buyer's quantity, or you want to say buyer's this thing. Just a second, charging over this phone. Yeah. So buyer's quantity or buyer's volume. Volume is what? Volume is basically telling you what about the quantity. Volume is basically like you will say like this is a water bottle. It says the volume of this bottle is this. Volume is what? The quantity of water inside the bottle, the quantity of people inside the trading. And most of the buy volume specifically talks about how many people in the quantity, in the number are entering for the buy situation. We don't know the exact number because see, we are dealing with a global platform over here. Crypto market is a global platform. You all know it's not just for one region, one country, one specific city, state and blah, blah, blah thing. It is for the overall world. They can trade into it. Okay. So if you want to know regarding the exact number for every day, that is very hard. Because we are calculating the global number over here. We are not just focusing on one region, one country or something. So they tell you in a way of a graph. The graph which plots like something, I will indicator volume. Okay. So here you can see this is the way they plot their graph for volume. Whenever you see small candles, see exact number is not there, but you can analyze that thing from there. Like the volume has been dropped of buyers. There is no volume of in the buy side for the buyers. That's why it feels very hard to cross that supply zone. Whenever there is such thing like from the demand zone, the market is rising, but till the time they reach to supply zone, yeah, retesting is gonna happen. Like for one time it will try to go, it will come back. It comes back to what? To grab more volume for whose side? The buy side. And then they cross that supply zone. Yeah, that's the position. That's the organic way to do it. In some way, what happens is like right now situation, 1 time, 2 time, 3 time, and previously when we watched it in the like bigger time frame in hourly wise, we saw the market try to, this is the supply zone. Yeah. The market tried to cross the supply zone more than 7 times. So you can clearly see one thing over here, that before we were having what? A continuous growth. Continuous growth, range, continuous growth, range, continuous growth, range. That was a pattern which was created for like, let's say past 3 days or past 4 days. That was the target. Okay. But once it touched the 103 to 105 level, we could see at that moment all the strength of the buyers were slowly going away. So in that thing, when the market is little coming down, it is little going down. The buyer side is not that much strong right now. So what happens is either the market can do one thing, that is range, which is doing, but at one point where you know that the buy didn't went from the market completely. The strength went, but there are still majority of buyers still out there. And the majority of the sellers became, say for example, majority I will tell you. Before, once we were having the continuous growth range, we were having the buyer maybe of 80%, 20% maybe the sellers. So we couldn't see that much movement of a seller. Only on the range side, I will show you that as well. Just a second, 1 second. Yeah. Only, see, you can see over here, whenever the market wants to grow, it is growing continuously. Majority is 80% of buy. For example, I'm telling you, okay, this is not like I know the accurate answer or I know the accurate number over here. But for understanding, you can understand this fact. That 80% of here people are pushing forward to do what? To go for the buy side. Only 20% of people are here who, whenever they comes in one range, like you might feel like whenever you are like physics, let's understand physics over here. Whenever you push someone, you apply an XYZ amount of force. Until and unless that trade, that person or that object has that force, it will move in one specific range. In an initial time, it will be very fast. Why? Because the force is applied right now, and that with a great amount of force. But the time it is moving, the time it is capturing the distance and its mass and the gravitational force and every of those things, it's maybe little difficult to understand because it's a physics. So at the time period, you will see one thing. Once you push one object, it will come to, like, it will slow down its speed, slow down its strength little by little, and it will come to that one point where it stopped completely. Whatever force you applied is gone completely after one XYZ amount of distance. Same thing, exactly same thing happens in the market. Whenever the market comes in a demand zone, the big players tries to push the market a lot. Try to push it in a such way that the other people, the retailers and the other global people, rather than entering from the short sell side, rather than being the bear, rather than being the sellers, by my force, like the big players' force, they should also be supportive. I gave the initial force, the market is moving up with a big candle, and little by little, the other people who are watching, like, yes, the big player is under right now and the big candle is there. So majority of people are from which side? The buy side. This may be the time where we go where? The uptrend, right? So at this initial time, 80% of people, the retailers, the big players, they're all pushing for the up movements. But whenever the big player stops the force, like I told you, he did the initial force. At some point, that force will be nullified or that force will be gone. At that point, what happens is now it comes to whom? Now it comes to the retailers, us people. Okay. Retailers has two options. Either to continue that thing or either they can go for the wrong side. Most of the people gets confused in this because you understand one thing, that the most clear minded people, the most clear psychological people are the big players. They know exactly what they want to do. But the retailers, they are we are very confused people. Why? Because we don't have our roadmap. We don't see our roadmap. We see what? A profit. Profit makes us things in a multiple situations, which is totally fine. Okay, which is, I'm not saying that is a very bad thing or this should not be happen. We should not think about the different scenarios as well. Thinking about different scenario is what actually making us confused, but at the same time, thinking of maximum probability is also good thing, because we know one thing. Even if, for example, me being the retailer, even if I'm confirmed, like, no, big players enter for the green side, I want to enter for the green side. At that point, the big player can also trick us, which is a very, very evident thing we have seen. The fair value gap concept, the smart money concept has been come from that exact situations where we have seen that the big player entered for the buy side, and after that, when they think like they have tricked the retailers, like, yes, we are going up, okay, just go for the buy side, and suddenly they will drop the big red candles as well, just to collect what? Just to collect liquidity from the market. And today I'm going to tell you about one indicator which can help you to analyze when the market took in the liquidity of the market. And after that, by understanding that thing, that whenever the market takes a liquidity, either it will take, for example, if it has taken the liquidity from the upside, for a while the market try to go down. And if it has taken the liquidity from downside, for a while or for a huge while, the market can go for upside. It becomes very, very, very simple by using that one indicator, which I will show you in a meanwhile time. Okay, stay connected with me for that time, but I will show you. You don't have to worry for that. So, in this situation, what happened? Whenever the force of the big player is gone from the market, we have seen that the retailers are the most confused people because they don't know whether the market can go up or down. And it is true fact. Okay, I'm not even blaming those people because so many of things are been taught to us via Google, via all those people who are trying to do analysis, research better than us, experts of experts. Those people have taught us those stuffs. So that's why we have those back of the mind scenarios. Ki what if like this is just a trap for us? What if we get fixed in a trap? Because you want to or you don't want to, you are gonna get stuck in a trap. In like, let's say 7 days you take a trade, maybe 4 to 3 days you are gonna get trapped because you never know what is the situation gonna happen. Every day, every single day, there are people who are losing money in the market. But every single day, in the majority, people are also having profit in the market. Now it's just which side you are picking. Which decision became the right and which decision became the wrong. Because most of the time what happens is, like if you go by one situation, like the supply and the demand box. Okay, zone box, whatever you want to call it. The majority of time what happens is whenever like the market or the big player jumps from the demand box. Okay, the demand zone, the demand box or whatever. Whenever the market jumps from there, we have seen one very simple thing. We have seen one very accurate thing over there. What is that? Ki at some point we all know that it is going to touch one point of the supply zone, which may be a new supply or which can be the previous supply zone. Okay, it depends on the analyst. Like in what way you are doing your analysis, how accurate you are drawing your supply zones, how accurately you are. Because see, in a point, like having a multiple time frame analysis is very necessary. Because sometime at 1 hour, you can see some different supply zone. And at 30 minute, 15 minute, 5 minute chart, you can see a different supply zone. Not that far away, but very close to each other. Which makes it like we all people set target. Like at the time, like we all know the supply zone is gonna be touched. Either it will be breached or either it will be touched and fall back. So we do what? We put our target to our supply zone. That is the thing we do. Okay. At that point, what happens is when you are having a supply box only on the representation of the 5 minute, 10 minute, 15 minute, 30 minute, not taking the multiple time frame analysis, just fixing on one time frame. At that time, what happens is before touching your supply zone, the market falls. Your target is not touched yet. Your target is to be touched when it touches your supply zone because that's where you have put your target. At that point, which you feel is like from that point, the market will have tremendous amount, like drastic fall the market will have because it has touched the supply zone. Not yours, but the other supply zone, which was there, which you never found out. Right? So in that situation, what happens is rather than having the better profit, you have the better loss, which makes our decisions, psychology, and every of those stuffs very hard to understand. Which makes us think a lot, like I should have done this, I should have done this. It demoralize each other, demoralize us to take the next trade, to take this trade. And even if we are taking a trade, we become very, that kind of person, like, I don't know, I should take it. And we end up taking the small profit. And exactly at that moment, you will see the big profit will come at that moment. Because that's the thing. That's like, whenever you think something is going to happen, the exactly opposite thing may happen. For the people who think that their luck is good, when they say the exact things can also happen. Like when since 2 to 3 days, I'm doing my proper setup, and exactly at those setup, it is happening. Like I said, it is happening. Okay. So when such situation comes, our psychology tells us to do something very unimaginable stuff. We go for the rare moments. Ki no, I believe the rare moment will come, and from there, and we just kept on thinking. So multiple time frame analysis very necessary. Not just one time frame, multiple time frame. So you can never miss out an accurate supply zone and accurate demand zone. That's the key structure you need to have in your mind. Multiple time frame analysis, because in multiple time frame you can get multiple knowledge regarding the market. When you watch the one single point, like for example, I will just show you. Okay, this is a 5-minute. One second, where is my arrow? This is a 5-minute chart. Okay, you might not be able to see it very accurately, because even I am not, because I have to show you the complete chart from where it has jumped from, the market has jumped from, and from that moment I have to show you everything. It can be this moment, okay, or let's just say this moment. From this moment it went up, came down, made one single range, went in an uptrend, organic uptrend happened to have that fair value gap, because after the epic uptrend, a fair value gap was created, artificial movement for the downtrend. So it has to be covered either in the organic way or either in the artificial way itself, but it will be covered. Again, it tried to break the same range, couldn't, and it fall down. Again, multiple things you can see in the 5-minute charts. Like a lot of time the market has tried to touch the range, fall down, which makes a decision more complicated, because in this small period of time, I will just do that thing, ghost feed. Okay, from here to here. I don't want ghost feed. One second. I don't want you, bro. Okay. Forecast bar pattern. Okay, that's the bar pattern. Okay. From here, I want till when it crossed. Yeah, this is the point where it crossed. Let's just take it till here. Okay. That's the complete bar. I will take it out and I will zoom it so you all people can see. Okay. Now what happened in this bar? First, we were in a range, the retailer range. You can clearly see such small candles are there. Okay, after that we had one huge good amount of breakout. From that breakout was actually, you can clearly see that that breakout was supported by a small amount of organic uptrend. It made one highest point. After that, making an highest point, the market suffered with the supply zone, and once it has one kind of a CHOC happened. What is CHOC? Change of character happened in the market. From here, we could see a character changed. From uptrend, the market tried to change its character. It went to downtrend. Now most of the people enter for the sell side. Rather than continuing the downtrend, the market from the little bit of downtrend started having a range. Okay. The market is now going in one range. Range becomes the most difficult part to understand, because at that time there is equal amount of buyers and equal amount of sellers, which makes the range, the zigzag pattern. The equal amount the market going up, the equal amount the market falling down, and the same cycle goes on in the zigzag situations. In these situations, market, like people, the retailers, they get more confused, and this is the best trap the big player can make you into, the sideways market. In that scenario, you cannot know which side will be the best side. Ek to you don't know which will be the majority of the sellers, or the majority of buyers, but they know because they are handling the market. If in your app, for example, I'm telling you, like you have seen that movie called The Social Network. It's the movie is made on the how Facebook was invented from the scratch to the topmost level. Okay, in that, whenever they were showing the Facebook office, they were knowing the each number. Whenever a new person was registering on the Facebook, a new account is been opened, a new trade is been there, a new like, new share or whatever, they knew at exactly that moment in that screen that what is the accurate amount over there. So just now think about that, think like the big players who are in the touch with the market, people who knows the data of the market. Every time there is some things are being calculated which is not being shared to you, they share it to you in the very overall manner, like sum up, but not the accurate. So they know what is an accurate number of people going for the buy side, what is an accurate number of people entering for the sell side. At this point, you will see in the range, they will wait for the maximum number of people to take the trade, which should be either in the majority of buy or sell, doesn't matter. Whoever will have majority, those majority will have the against trade. For example, if the majority of people over here was red, right now I cannot see the color, but even if the majority people are red over here, the market try to push up to grab what? To grab their stop losses. The liquidity. Once they grab the liquidity, if they feel like I'm done enough with the liquidity, from there they will again jump up. Okay. So what happened? Gave a breakout, grabbed liquidity, again sustained. Again sustained themselves to have more trap, because you clearly saw from the range of 96, I guess. Yeah, $96K of the market. The market right now stands at 103. Reached to 105, but right now is at 103. So you can clearly imagine till what level of liquidity your market would have grabbed to have this amount of uptrend, this amount of money inflow, or you say, because outflow is not happening till now. Outflow may have happened or who knows, but amount of inflow required for market to jump from that price range to that price range is a lot. It's not a small amount. Just imagine that it's not a small amount, because we are putting that coin a value, and that value is rising in 24 hours, and that to not just $1, $2, $3. More than $3,000 the value is going up in just 24 to 48 hours. This is not possible by an organic way. Like for example, like right now consider our YouTube. Okay, our YouTube is having 300 subscribers. When there are 300 subscribers, I see most of the people who comes on my live stream is in the range of the average. I'm telling you, average people I see on my live stream is from 50 to 60 to 70. That's the average range which people comes on. Some might, it can also cross 80, sometime it crosses 100 as well. But average, if I take 50 to 60 to 70, that's the average range. This is an organic growth is happening. Okay. Now there are other things, like for example, if I just use any of the paid instrument, paid subscription, paid this, paid that, within one day, in 24 hours, I can have thousands of people spamming on my chat box, thousands of people being there on the live, thousands of people are constantly asking me and blah 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 blah. That can happen by a what? By a paid thing. So, like I told you again, the same thing. Until and unless you push and you apply one external force to some object, it won't move, bro. So just imagine what kind of external force was applied on the trading. So it jumped from 96 level. It was to actually 80, 88, 89. From that slowly by the very organic and the major swings by just grabbing the liquidity, they went up till 96. From 96, that is sudden jump to 105. It's not possible just with the big players. It is the trap which they led to you a lot of time. Okay. After that, again a breakout, bent in a range, again try to go a little up, a breakout. After that, again a downfall started to happen. And this time you can clearly see one very specific thing, that this is an organic movement, but this. You can clearly see that this is called a major swing. What is major swing? Major swing is like, for example, from this point, you can see, just a second, okay, just a second. I will show you major swings. I know exactly what tool to use here. Where is the path? Okay, yeah, path. This is a sideways market. This is major swings in the market. You get my point? In a sideways market, the point in which the ticks is basically 1 point the market moves. It can be from like people started from 0.1, 0.2, then 1, then 2. In the like Bitcoin, we consider from $1 because it has been in that price level that we don't consider right now from 0.1. People does, but it has reached to that value that right now we need $1 to be considered as one tick. If you go in some let's say Solana or let's say SUI or more such coins which has the value less than 10. In there, we don't calculate the ticks by $1. We calculate the ticks by 0.1, 0.2, 0.3, 0.4, and so on and so on and so on. Okay. But in the Bitcoin, we have seen that the value is more than like, it's a 6-digit value we have put in a dollar. So we don't require to have 0.1. If we take the calculation by 0.1, 0.2 ticks, it will be way much. That's why we do it for $1. $1 is one tick. Now you can see one thing, whenever we are having the normal sideways market, the range, whenever we are in a very specific range, okay, this range, the market hardly moves in the Bitcoin I'm talking about. Okay, if you compare the sideways market range, the overall point the market moves in one specific range from one price to another price. Even the sideways market for other newborn coins can be the major swings. But in the sideways market, we don't consider them as a major swings. For the sideways market, it is very normal. Okay. After that, what happens is, in the Bitcoin, it hardly moves from 50 points to, let's say, 150. From 50 to 150, that's the max the market will move, or maybe 50 to 300 or max 500. Okay, 500 will be the max. 50 to 500, the normal range of the market moves. Okay, $500 shifting, like coming to the market, going from the market, coming to the market, going from the market in small time frames. 5 minutes, the market is losing that much value. Okay, but compared to the 6-digit, it is very less. If you have 1 lakh, for example, you are having a 1 lakh amount, and from that 1 lakh, 5 rupees coming, 5 rupees going, 5 rupees coming, 5 rupees going. You won't bother with that 5%. You won't be bothered with that 5 rupee. So same way, if we have 6-digit, 100k, 103k dollars, and from that 103k dollars, just $500 comes and goes in the market. They don't have that much of worth. The $500, $10, $20, $600, $800, they don't have that much worth compared to the huge value that we have put them into. So in this thing, normally the market ranges from 50 to 500, like I told you. Now, in the major swings, what they will do is, in the major swings, they will make the market shift from the range of 50 to almost 2000 or 3000. The major swings are happening from 50 to 2000 range. Now, for a retailers, whenever they see that the market has moved up more than 1000%, they have a little bit of confidence that maybe right now the market can head to the upside moment. Maybe the market has grabbed the momentum for going uptrend. Similarly, vice versa happened for the downtrend as well. If the market has lost more than 1000 points in the market thinks like right now sellers pressure is there in the market and it can drag it to more down. When it crosses 1500 points to 2000, like from that value 2000 price is dropped, 2000 or 3000 price is dropped, the more people believe that yes, the sellers are strong over here. And whenever they think that sellers are strong, they wait for the retracement, they enter in the market, and exactly at the same point the market shifts to the uptrend. And not just for 500 or 600 points, it will shift to exactly same. Whatever the market took, the same amount the market will give in the major swings. And the swings doesn't happen exactly like a zigzag. I will show you how it will happen. Just again the path I need. This is the path. Yeah. For example, the market reached over here. Okay. This is an external. Okay. This is like you have to understand internal path and external path. How should I make you understand this? Let me just draw it so you can understand. For example, path. This is the major swings. Okay, cool. This is one major swings in the market. This is how the major swing looks externally. But if you just go on the lower time frame, or if you just check it out in the 5 minute, like very intuitive, like where we actually take a trade, your major swing doesn't look like this. Your major swing might look like something like I started in the wrong position. Wait a second. Your major swing might look something like just a second. Okay, it's not very accurate. I tried my level best to draw. I'm not good at drawing. So this is how it will look. Very confusing. At the time when you are focused that yeah, I can see what I can see over here. I can see high and low. One. The next time became higher high, higher low, higher high, higher low, higher high, higher low, higher high. From there the market starting to drop again. Became what? This is the first high, this is the first low. The next high became the lower than before. What it makes? Lower high. And the low also became lower than the previous low, but becomes lower low. Then the same scenario, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Which confuses you a lot. Okay? Right now it was an uptrend. And sometime in a peak, in the peak over here, rather than giving you the point, it will give you a range. Like market came from here, tried to sustain himself for their little while time and again dropped instantly. So this makes it more confusing. But overall what we see is, like, this is very confusing chart. Overall we call it as a external path will be went up, came down, went up, came down, went up, came down, went up, came down. That is an external path of the market, because even though it is taking a lots of stops in between, but we know from where the market started, where it came, from where it dropped till where it dropped, from again, support, resistance, same, again, the repetitive stuff. So we can draw one external path of a range over here. Rather than getting confused in this small paths, we can draw one box over here, that this is our major swing box. And when you draw this major swing box, which is little hard to draw, but at this point it will be very easy for you to take a trade in major swings. Major swings can have you multiple losses, but at the same point, major swings can help you in gaining quick profits. How? Once you identify that it is going in one specific range, anytime the market will try to come over here, you know from here the supply has been sitting over there. The majority of sellers will enter and buyers will exit from there. I should go for a short sell side until the market comes to my that demand zone, from where the support, the major swing will again take a similar support. For that you actually have to witness 2 to 3 support. You cannot just like take a random guess, like you won't enter at this point and leave at this point, because you need at least 2 of the range to think like maybe this and this will be at the same situation, and that too is also maybe. Okay, nothing in a market is a very accurate thing, that you have to understand. That is a harsh reality of the market. Nothing is accurate, everything is a maybe situation, because you never know what will happen the next. That's why whenever you see the knowledge which has been provided of the market and every other thing, they always come with one sentence, that market is unpredictable place. We cannot predict it 100%. We can guess it, what can happen by some limitations. After that, it is on God's grace. Not even God's grace, it depends on those other people, because you are one of those million people who are doing a trade. You cannot just like think what is the other millions people are thinking at this point, at what decision they are taking. It becomes very hard. That's why the market is makes this abnormal movements. This abnormal movements comes from this confused minds. It's a very simple thing to understand, because not all the people will take the similar trade like you. They have their different mindset, different confusion, different psychology, different strategy, different, everything is different. One person is different from the other person. Similarity and same is a 2 different words. There can be similar trades, but not the same trades. Similar trade, in that similar zone, similar people went for similar buy situation. On the similar situation, similar people went for similar sell situation. It is not like exactly 500 people went for buy, exactly 500 people went for this. No, that doesn't happen in the market. Okay. So at this point, how you need to be safe? Obviously, you need to be safe from such situations where you need to have when the people grab your liquidity, they will throw some instant up growth, like the big candles of green, big candles of red, to grab just your liquidity. That is called stop loss hunt. They are hunting your stop loss because they know exactly where is your stop loss. Because as the owner or as the big player in the market, it is very easy. For example, I will tell you, if I say to you that example of which company should I give? 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 Which company? For example, okay. For example, there is a conference. Okay. In that conference, 50 companies are coming in one position. 50 companies are gathered together for some XYZ mission, XYZ reason, XYZ. We don't require the reason to understand this thing. 50 people gathered over here. 50 different company people interacted with each other, but on a very first level, like they just met. You just know the name and which company they work on. Nothing except that. Their number, where is their house, what is this private number, personal number, blah, 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 blah thing. You don't know about that thing. And it is very hard for that person, that different company person to know the that company's data. Right? For example, if I am Zomato and I want to know who is the current regional manager of Swiggy, it will be very hard for me to understand. The name will be there in, like, if you just Google it, search it in their data and blah, blah, blah. The name and the person's age and blah will be there. But what about the other stuffs? What about the inside stuffs? We won't know. And it is very hard for us to tell as well, because we are not accessible for the company's data. We're obviously very similar. So in that situation, what happens is you will try to either make a connection in that company who can give you that information. Either you can hack, either you can give money to some people so they can give you information, or you can have the personal connection as well. Like you directly approach that person, like I want to know this and blah, blah, blah. Several ways. In the market, same thing. The retailers will never know what kind of market or what kind of movement will we have. But if you want, like for us, there is no way, obviously, but the big players, they have a way. They have the connection. They have the inside things. That's why the term of inside trading was born, because they knew such things are happening. A big player can directly contact, or the market can directly contact to the big player that right now we are having this many stop losses at that exact range. Just do one thing for us, just make a short sell at a very small time, and obviously you have that a huge amount of money, you won't even bother like to have a little bit 2 to 3% of loss, which we will give you. They might have their deal as well, who knows. So in that situation, who gets stuck? Us. The retailers get stuck over here because our stop loss is being hunt. The information is being provided from one place to the another, and that information is used in a very wrong way for us. So there is one indicator which is called as inducent stop loss hunt. I will show you in the TradingView platform as well. Inducent. Yeah, the first one you can see inducent / stop hunt TFO by trade for op, opposite or op, whatever you want to call it. Okay, so this is the first thing you will type. Okay, whenever you type Indu in the TradingView platform, you will see this inducement / stop hunt TFO trade for op. You click on this. Okay, let's just reset our, yeah. Then go, there are some settings which you should change. You go on the settings, show stop hunt, use only hammer and stop losses, and also show the fractal highs and low. Okay. After that, you don't tamper with this data. Let it be 3, stop hunt all, stop on threshold 0, max bar 200, because 200 is the maximum amount you can have. Minimum bar of the stop loss look for is 10. Or you can change it as well. If you want, you can make it to 5 or 4 as well. It depends on you. If you want to capture the every of the stop loss, but 10 is actually the least amount of time. Okay. Session timing and blah blah. Session timing, yes. Session timing over here, you will go and make it from 0, that is the start of the market, and you will go and put the end number, that is the 11:45, that is the 5 minutes before the end of the market. Okay, so from the session timing will be from the start of the market and the end of the market. Now people will say like the crypto market is 24/7, bro, but still that one specific day you can calculate. Like from right now it is 13th May. 13th May market will have a start, and 13th May market will have a stop. It won't be stop for even for 1 second, but you can calculate for one specific day as well. Whenever it hits 0.00, that is a 12 a.m. morning a.m. where the date changes from 13 to 14, then the session time changes. So we will have this session timing from 12, that is the start of a day, and 11:45, that is the end of a day. Cool? Okay. Volume multiplier, SMA length, and blah blah we won't touch. Upper red color will be green. I will explain you what is upper red color in a little while. Lower red color will be red. And to see the line very accurately, just change this into solid. Okay, just change this dotted into solid. If you can adjust with the dotted one, that is also fine, but I prefer the solid ones. Okay, like it will be very clearly visible to me. Okay. So now something like this you can see. The green line touching from one peak to another, one peak to another, one peak to another. Same happening for the bottom as well. One from the lowest point to the another lowest point. But the one thing in a very common you can see is, for example, let's just see this example. Okay, this was the low. This low was, if I just go very accurately, I want an accurate answer. This low was at 101. Yeah. This low was at 101,461. Okay. Now let's just see where it touched. It touched little above, the red line is above, and you can clearly see the actual low over here is little below, and that is 101,448. So you can see there is a small, I'm not saying there is a huge difference between the price range of that low and this low, but there is a little bit extra. Why there is extra? If you can answer that question, if you can think about it, why it is a little extra low? Why? It is because, for that I will first make you understand the upper red and the lower red. What is this green line which is called upper red, and what is this red line which is called lower red? Okay, so upper red, first let's talk about lower red. Lower red is basically what? Lower red is basically your stop loss. It is telling, the indicator is calculating what? It is not calculating the accurate number, but it is actually calculating that maximum people had stop loss at that specific range. This was the range where the people had the stop loss. It shows an exact line, but it is a range. Like you can consider at least this kind of zone. I will draw an accurate zone. 1 second. Rectangle. It starts from here and this is here. So you can clearly see I made a one zone because its stop loss won't be at a specific stuff. Maximum similar stop loss, like I told you, there won't be same. There will be similar. Okay. Some may be same as well. It is purely coincidence. It's not something like they planned it, like I'm gonna put it on that level, you also put on that level. Sometimes it's coincidence. Okay. So after this one thing, for example, if you will see, I will give you the best example for that. You go in the mall, you buy one t-shirt, and you see that exact same t-shirt maybe after 1 week, 2 week, 3 week in someone's body. That's a coincidence. You both purchased the same thing, but you didn't thought to buy it together. That is a coincidence which happened. Similar is like every people going in that one specific mall. Similar mall they are going. Okay. Leave those examples. The zone is created. Now the investment stop hunt indicator tells us that where is the maximum stop losses. But the only bad thing about this indicator is that it will tell you after the stop loss is hunted. because it can't give you the inside trading things. If they gave inside trading tips, information to the retailers, obviously they will also grab an opportunity to manipulate the market or do some illegal thing in the market. Like, they will know when to be safe and all those things. So this stop hunt indicator, after the stop loss has been hunted, they will tell you, it will show you that red line after, not before. That is the backdrop. But this indicator was made for you to realize, not that you have to like be prepared for the stop loss or something. No, it was told, that indicator gives you that situation at that moment, like now liquidity has been grabbed. From here, whenever the market grabs the liquidity, it has the energy now. For example, if I am drinking a Red Bull, I have energy for specific time or period. Similarly, the stop loss, the money is a Red Bull for the market. The market grabbed the Red Bull, drank it, and now it has energy to go either on the upside or either on the downside. It has an energy now. Okay. Cool. Oh, just a second, bro. Too much. And why? You understood one thing, that this line represents the maximum stop loss were there, which has been hunted. Okay, this is the range of the stop losses. The stop loss were here, stop loss were, this was the one range, this was one range, this was one range, this was one range, one more range, one more range, one more range. Small range as well. So you can clear, you get my point. This is all where the stop loss has been hit of the people and market has got liquidity. So this indicator gives you what? First, this indicator reveals the place where the market has gained liquidity. Second, this indicator also tells you regarding which was the major place where people took stop loss. Third, this indicator also tells you regarding either it is an upside upper rate stop loss or the lower rate stop loss. Upper rate stop loss is basically when people are like having a short sell and they have put their stop loss above. Lower rate is basically when the people are taken the buy and their stop loss is down. Simple. Okay. And one thing you will see and you will find, I'm not saying majority of time, but sometime the market whenever the market has hit by a liquidity, either it is green or red, doesn't matter, but the general, see, I am giving you a general knowledge over here. That general knowledge is of no use. I'll tell you from the beginning itself. That general knowledge is of no use. But they say that whenever there is a green red, like this upper red line is being made by the stop loss, majority of, still again I'm telling you, it's just a general knowledge. It doesn't work in the market because you will never know when it will go for which direction or something. But the general idea says whenever the market has taken the green red, the stop losses of all the what is that word? What is that word? What is that word? Whenever the market is showing the upper red, that means maximum people's short sell, people who are doing the short sell, they have kept their the stop loss above. So whenever it touches the stop loss has been hunted for the short sell, it has to go by the book law, by the book knowledge, it will go down. Whenever you see a green upper red line, from their maximum time, you will find out that the market is gonna go down for a little while, but it will go down. Okay, one, it grabbed, it went, but again down, 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 down. So you get my point over here, what I'm trying to tell you. As per the book knowledge, it goes down, and that is also, I wouldn't say majority of the time, because that would be like me telling you very wrong thing. I'll say 50-50 times. 50 times, let's say 60-40. 60% of the time, the market actually follows the book knowledge, where whenever it grabs the liquidity from the upper rate, the market will go down for a little while of time. I'm not saying huge, little while of time the market will go down. There will be a downtrend from there. So you can enter for the short sell. But at the same point, sometime like this, market grab liquidity, still is going up. Market grab liquidity still went up and then again came down. Market grab liquidity little went down and then again up. There are more. Market grab liquidity still went up. Brush. Liquidity is grabbed over here, market went up. Liquidity grabbed over here, it went up, grabbed the another liquidity and then came down. Okay, yeah, this. Market grabbed the liquidity, grabbed another liquidity and then shoot up. More than 2 to 3 liquidity, if it's grabbing, it will go for uptrend because that amount of energy is drinking. But on which direction, that's very hard to tell. And similar for the lower red, that is basically your red line. Whenever you see red line, there are high chances that the market is gonna go up from there. High chances. I'm not giving surety, but as per the book knowledge, that is what it's supposed to happen. But you can clearly see till market grabbed the liquidity till now here, like from here to here the liquidity grab was happened. Market went down. In a lower time frame, market grab liquidity went down. Market grab liquidity went up, went up, went up. Very little. Okay. And grabbed liquidity went up. Grab liquidity little came down but went up. Eventually went up. In the right now scenario, grabbed grab liquidity, went up. You get my point? Okay. Now, why the market, why this line is not exactly at that low, like I told you regarding this. If you see this thing, the line actually goes little down from that line. Why? To be sure to grab a liquidity, because they know one thing, that this is a range, this is not a number. Above here there are people, and it goes little more deeper to create another low to grab the liquidity. Because they have that thing, like you have heard about the people, like have your stop loss little below that thing, little below. So the market also comes little below to grab more liquidity. Raja Darshan Yanam live. Wow, Prince. Whatever. Thank you, but thank you. Thanks. I love this shirt. This is my second best shirt. Just gonna delete everything. Hit the reset. Okay. See, in the recent market, right now we can do an analysis. In the recent time, the stop loss has been hunted by majority of people, and you can clearly see a downfall has started already. Not the major one, but still the downfall has started. Let's just go on little multi-time frame analysis, so we can draw our supply zones and every of those things. And this is a very useful indicator. Please make sure that you are using this indicator. It tells you where the liquidity is being grabbed. Okay. See, continuous fall. Okay. You understood what I did there? I draw one supply zone and one demand zone. And right now, as per the look, in 1 hour time frame, the the market has taken from that supply zone a supply, and it is coming down. Maybe it will touch the demand zone again to jump off created. We'll go into 30-minute time frame to make it more accurate. See, this is the accuracy I am telling you. At this point, I can see it is little bit up. Okay. Here. Ta, 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 ta. I just wanna go in one second. Just a 1 second. I went to 4 hours to check few things. Okay, let's go to 15 minute. Everything looks good. Let's go in 5 minute. In 5 minute, you can see these small ranges as well, where it has taken the supports, but we will be fixed at this point. I'm not saying that it will be, it won't take the support at this level, but the That's the range was breakout over here. I'm not. See, this can be one of the demand zone as well, because the range was broken over here. You see this demand box, path. Yeah. 1, 2, 3. You see this box, and in that box you can see that W pattern as well. More confirmation. That is a box where the demand zone was created, and from there the market went up. Not that much, but yet it went. See, this is the thing which we saw at 5 minute, but according to 1 hour, this is the original demand zone. This is a 1 hour demand zone. Okay, so I will just type it here. 1 hour demand zone. Let's make it a little big. And this is again the same, which is very accurate. 1 hour supply zone. So I'm thinking to make a zone over here as well, because from there we could see that the market actually went see, it even made the hammer candle, which is justifying that the buyer pressure is here, because it gave a breakout from that range to went up. And liquidity grab was also happened at that moment. So where did my indicator go? I will wait for 2 to 3 candle to draw this supply zone, because like right now situation is making me think in the way that it is a demand zone over here, which it is, but in a lower time frame. In a 5 minute it is created. In 1 hour there is no such demand zone over here. So let me just see. Let's see. If it continues to go up from there, then we may have this thinking like, yeah, these are demand zone, demand zone. Other than we have our permanent demand zone over here. This is the true demand zone. Okay, let's just see from here. But that thing also can happen, like a fair value gap thing. Arey. A liquidity has been grabbed, bro. A liquidity has been grabbed. As per the book knowledge, it should go up, but do we trust the book knowledge? No, we should not trust the book knowledge. Book knowledge is to make you be that person who can gain knowledge and then think of his own. Trust me. Let's wait to check out the market more. What? Somebody turned off the light. It's fine. Let's wait for 2 to 3 moments to get to know whether this is actually a good demand zone or not. It doesn't look like that. That can be the way the market is trying to move now. Jingle bell. That's why I advise a lot of people not to put stop loss, but at the same point, putting stop loss is necessary. Pa 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 pa. Still debating, huh? In 0.5, the market has taken a good support as well, as per the market should take. What was the previous high? Previous high, I wanna see. Okay. Multiple supports at 0.5, multiple, and which we can clearly see. From there, the market is trying to go up. So we will see if the market goes up from 0.5, then maybe we can have some good situations. And I did this is from the lowest point of the market we reached to the topmost point. Topmost was wow, 505k something, 505, 790, blah, 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 whatever. Okay, that was the amount. And this is the fib at 0.5. The market has taken the maximum supports which it should take. Is a golden range. From there the market actually went down, didn't take support at 0.6, but yeah, in between 0.6 to 0.7 the market has taken the support. Okay, I moved it. Exactly. Yes. Okay. I wonder why we're still debating, huh? 0.6, 0.7, 0.5. ये वाला तो हटा दो ना. Five. Six. 0.7. Okay. Okay. I'll come people in 5 minutes. So that's the fib level I've drawn. Okay, have such kind of setup, clean setup, draw the supply zone, demand zone, not from one time frame, from multiple time frame, 1 hour, 2 hour, 3 hour. Make first in the bigger time frame, and whenever you move to the slower time frame, try to make it more accurate. Try to make it more smaller, bigger in whatever way it feels. Okay, and then the fib gives you very, and fib also not from the like the lowest point and then to the highest point of the market it reached in the recent time. Recent, you don't have to go for 110 one. Okay, recent time, whatever was the highest, like 105k dollar was the highest, till there you will plot, and then you will see this number 0 0.5, 0 0.6, 0 0.7. Why only these three? Because these three are considered to be the golden ratio of the fib, where the fib is short form of Fibonacci, where they will tell you which can be the best way, like line to take the retracement. Either it will be 0 0.5, 0 0.6, 0 0.7. Oh, hava, hava, hamba, hamba. Kaliyava, la, 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 la. Just a second, people. Here says, hi Yash. Hello here. What's up? How are you doing? How's your life? Are you understanding? There is not that much of understanding everything. This is so far the most clean and safe strategy I've came across, and the cutest. Thank you so much. Thank you so much, Arya. Thank you so much. Thank you so much. Okay. Oh. Oh, partigiano, I'm there. Oh, partigiano. Tia Bella Ciao. I guess everybody has watched Money Heist. Money Heist was a crazy, bro, crazy. Like, I want to be that kind of like story I want to make. Not even story, but that kind of plan. If I'm making a plan, I want my plan to be that thing. Like every loophole, like everything, like plan starts from the start, problems, crash down, cover up, go up, cover up, go up. But it has loopholes as well, where there are chances that it can crash like this. And there should be like a professor, like how professor did, he had every answer for every question. Like till the last time he has thought about every plan, everything, every possibility, every, even though there might be those possibility which we have never seen, and he had thought about those as well, but he thought about each and every possibility, each and every, which is nice. टेस्ट क्या ही बोलूँ मतलब ओ partigiano o Athena tu bella ciao bella ciao bella ciao 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 Navigiano Athena बोले तो कैसी होगी है अपन को जैसे मांगता है वैसी होगी हाय टुरुरुरुरु टुरुरुरुरु टुरुरुरु टुरुरु टुरुरुरु waiting for the moment in the market guys, we waiting for the moment. Never enter in the between. Start from either here or either here. Never in the between. A drop down, drop down, drop down. पर्दे जानो Gocho Saduro. The market is making range now on that 0.6. Let's wait for that market to break something. Let's wait. crash at my place. Pooja Chauhan, hey, hello Pooja Chauhan, what's up? How are you? Thank you so much for joining this live stream, and also Sangeeta. Hi, Yash Beta. Thank you so much for joining this live stream on the Cheesy platform. Please do not forget to like, share, and subscribe to our channel. Thank you so much. Market is not going anywhere. The hardest part of the market where we can face is market getting stuck between fib range, in that one range when it is ranging from 0.25 to 0.6 or 0.6 to 0.7, when it is going in that one specific range. That's the point which sucks the most. Okay. Guys. What shall we do? What shall we do? What shall we do? Dr. Balrathor, hi, Yash. Hello. Hello, Dr. Balrathor. Thank you so much for joining this live stream of this Cheesy platform. It means a lot. Appreciate. Market is going in a complete range where we don't know, like in the range we should not enter first, and that too in one range which is abnormal range, that is a downtrend range is happening. From a range when downtrend, it can again turn to uptrend. Like I told you that we have that one scenario where it is 5 wave movements, but in that 5 waves, how much more movements the market can make? This is one of those movements. So we wait. जाने जा भगवान जानता है, मेरे प्यार से शैतान भागता है. मेरी हाथ की लकीर से ब्रह्मांड में आप जाए पर लिखता नहीं हूं क्योंकि हाथ कांपता है. Watching a market is so boring, yeah, so boring. Like it's like the time when we used to study when I'm having a topic to tell you. That was a very good period of time where I have something to say all the time. But when you have to, like, when you are doing a live trading, the things you can do is just like you watch the market go and try to enter at that moment where it can be the good entry for you. But that good entry comes not often, very less time it comes. Life is the dream. Till that time, what we do nothing. We keep on watching the market. I'll try to find some games here. I'll try to I try to find some games where I am playing some games with you all people or something, because I get bored, bro. I get bored. I can, like, you can see the movements which I make. I go here, I go there. I have those things. I cannot stick to one place. I have to move. I have to do something. I cannot just sit at one place. One place. It's not possible. Life is the green. Life is green. जो सीखता है हार से वो हारा नहीं, जो जलता है आप से वो तारा नहीं, जो जलता है आग से है तारा वही. The rally of green candles we can see in the market. But till what time it will sustain? Because it's not big candles, these are retailers. La 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 la. If it falls from one supply, 1 hour supply, we'll go for the short sell. Right now it's showing that it has strength to go, but let's see. After grabbing the liquidity in the market, you can see stop hunt. After grabbing the liquidity in the market is coming down. I just hope that from 0.5 range it goes up again. No, it's not practice. It's inducement stop and TFO. Kind of practice, but not exactly. Thank you so much, Aman Mishra, for joining this live stream. The market is just ranging, bro. I'm just waiting for it to jump somewhere so I can either touch the supply, fall down, do something, at least do something, rather than just being in a range. Just grab the recent liquidity from the market and now ranging. Same, Aman Mishra, same. I also learned a lot of stuff like marketing. I feel like SMC, the smart money concept, is the most logical concept I've ever felt, other than that's resistance level, support level, and all those things. Rather than waiting for the big players, waiting for the big candle, making supply and demand zone, and then making some quality trade, that is better. And I am also doing like paper trading only on this. You can check, that's my account history, like $107, 500, 6. Let's leave the 6,000, 2,000. My minimum I keep it's like 1,000 only, or 400 or 500. That's all. I'm also like learning at the same point, but I can send you some of the analyst charts in BTC. I'm using supply and demand. I started 5 to 6 months ago, bro. 5 to 6 months ago. Not before that. I was same like beginner from the starting. I started to learn like in the Cheesybit platform. I made a full roadmap journey. Like I went from the candles to chart patterns, then indicator, then different strategies. But then I understand when you like read about those candlestick chart pattern and all those things, it's a book knowledge, and the book knowledge never comes truth in the reality of the market. We see a very abnormal movements. We see a lot of stuffs which happens, which questions ourselves like the book said this much, like W pattern created, it should go up, but it doesn't go up. So I learned about the smart money concept, and now I'm following the smart money concept. I feel this is the most logical way of concept, like how the big players manipulate the market, how they make the movement whenever they want to make a movement, grab liquidity because market needs a liquidity to go. It won't be just like, but yeah, I'm really appreciative if you can send me analyst chart and all those things which you have mentioned, because you're also using supply and demand. I want to actually be more accurate in the supply and demand zone. I'm trying every day, I'm learning every day, I'm doing stuffs, but I want to be more accurate in this supply and demand zone. Whenever I have to make a supply and demand zone, I started with the higher time frame, and then I shift to the lower time frame, and then I go on correcting the time like the supply and demand zone. That's what I'm doing right now. But if you have new techniques which I would learn, I'm open to that, bro. Thank you so much. But where will you share me? That is a question. Aman Mishra. Happy to have that information, bro. Why not? I too want to be 95% accurate. I don't think I am 95% accurate. Like if you just visit my last 2 episodes, in those I was very. Can I have your email? My email is. What's my email? One second. Da, 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 da. 90 to 95%. Okay, that's great, bro. That's great. The past 2 trades I've taken, I did the same setup. I go for supply zone, demand zone, and then I also create the Fibonacci R, but only I include the golden ratio, that's 0.5, 0.6, and 0.7. And then I wait for either retracement or either the perfect entry when if it's I'm late from the demand zone, because sometimes I don't enter at the demand zone, because I know it will again retest himself, the pullback will come. So I also draw the Fibonacci to give me if it's going to be a retracement, where can be the potential support area. Sharing. My mail is, yeah, got it. My mail is Yash @ yeah, sometime it happens. Yeah, exactly. So my mail, Aman Mishra, my mail is Yash @ cheesy CHEEZEE hyphen, that small dash, global GLOBAL.com. That's my mail. Yeah, that's my work mail, bro. It's just the company, the Cheesy Bit company. I work for a company, so that's the work mail I gave you. That is correct. Ba, 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 ba. Ra, ra, ra. Sure, bro, sure. I appreciate your help, bro. Thank you so much, by the way, for joining this live stream. And also, like, we are a very small community over here, so I'm trying to grow my channel a lot. Please do share. Like, do you know Piyush Garewal? A YouTuber? I will check. Is he a YouTuber? I will check, because I follow 2 to 3 people for like their ideology. Let me just see on YouTube. Piyush Garewal. Piyush Garewal. Okay. His channel name is Candle King. Piyush Garewal, Candle King. Let me see. Okay, got it. Candle King. Damn, bro. 349k subscriber he has. Okay, got it. I saw Piyush Agrawal here. He has creator of MMC mirror market concept. Oh, there is a new concept he created. Mirror market. Nice. One of the only original creator of reversal concept, demand and supply used worldwide, and blah 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 blah. I'll surely check this out. He is diamond. Sure, bro. I'll check this thing out. I'll learn from him. Yeah, he also has smart money concept, understanding market behavior. He also has that. Everybody starts with indicator. That is so basic, bro. Like even I started with candle patterns, indicator. Yeah, that's where we all start from. Okay, MMC, mirror market concept. Way to the biggest analyst, structure series, bird finance market, $100 to $1,000. I'll check. Okay. EMA. Oh, nice. EMA. Exponential moving average. But the only thing about indicator I don't like is it calculates the present stuff. So what about the prediction? We need the prediction, because present stuff, we can see that what is happening in the market right now. Like EMA and all those indicator, MACD and all those, RSI is useful because it tells you regarding the strength of the market, whether the buyers are there. But now I'm not even looking at exactly, bro. Exactly. You get my point. Like indicator is like the starting era. Like you need to know this, but after that, everything is in front of you. Like all those candles, everything is just in front of you. You know what kind of trend is it. You know the price action. They are all lagging. Exactly. They are lagging as well. And other than that, like most of those stuff is like gives false signal. Like whenever they see some good volume, the whole candle, the line, MACD line will cross that blue line. We think that it is a buy position, but we all know that it is not a buy position, just a volume was increased. So that's what I feel very bad, because I don't use indicator anymore. It's like we go for our strategies. Sometime I use RSI because I want to know the strength of the buyers and the strength of the sellers sometime, which you can also know by looking at the candles, but sometime I use it just to check the strength. So which majority I should pick and every of those things. It's really nice, Aman Mishra, to have you on my chat. At least someone can understand what I'm trying to tell. Na. And even this, yes, I have a best strategy of RSI I have learned. What is that best strategy? And even this indecent stop hunt, like this indicator, it's a good indicator. I won't deny that this is not a good indicator, because we should know where the market is taking liquidity, and because from the place where the market takes liquidity, we can see a very good movement, either up or either down and all. But it only works in a bigger time frame, more than 15 minutes. Okay. I use 5-minute time frame in my live stream, because like if I go for 15 minutes, one candle will have in 15 minutes. So I go live only by 5 to 8, that is Dubai timing. Like I am in Dubai right now. So, and the Indian timing will be 6:30 to 9:30. So in 3 hours, 15-minute candle will be very less to form. So that's why I go for 5 minutes to take a trade. So I can have like huge movement, because most of the time, until and unless you find the perfect entry or something, is watching market is just like boring shit. Like just watching it, when it will move, how it will move, when it will move, and all those. And in 2 minutes, I'm gonna leave, by the way, Aman Mishra. But I would really like to tell you that this platform, I come live here. I would love to have you on my live stream all the day. And tomorrow and day after tomorrow is my holiday, so shit. But there will be another anchor. I'm analyzing 1 minute time frame as well also, but the time to enter or when I trade is shift to 5. Yeah, exactly. All people do it. They will start analyzing from the higher time frame, that is 4 hour to 2, 1, 30, 45 minute, 30 minute, 15 minute, and then okay, it's 1 minute time. It's my time to go. So I'll take a leave. Thank you so much for all the people who joined this live stream. We are slowly growing. We are not doing any paid promotion or anything. We want to have an organic growth. We just want to have like those like tight community of the traders, which is growing little by little. We are not getting exposed that much. I can understand that, because we are very small channel right now. But soon we will jump to the big factor where we will be having more and more and more and more people. I would really appreciate if more people like Aman Mishra explore these channels, because we all can relate with each other. Like that's what I want to have, like community which knows each other, knows, they grow us, they make us learn something, I make them learn something. Like we both are there for each other. I don't want this channel to be just like I just come here, I speak, you listen, and then you cooperate with me. No, I want like someone also come join us, teach me, make me learn, because I'm also like, I'm not even expert. Okay, I just started 5 to 6 months back, and now I'm having that much grip, where I can understand the market up to like, let's say 60-70%, but I want to have that 30% cover as well. Okay, so thank you so much. I am having some issues over here, so I cannot see chats. Just a second, I'll check it from my phone if there is any new Aman Mishra chat. Okay, I'm analyzing. Should I send you some of my charts? Yeah, bro. Yeah, you can. Really appreciate it. I would love to, whenever I meet some people, I would love to learn something from them. Really. So thank you so much for all the people, and Aman Mishra as well. Thank you so much for joining this live stream. I hope you will come next time as well. I come live on Friday to Tuesday. That is my live timing, like the days, and the timing, Dubai timing is 5 to 8 and India timing is 6:30 to 9:30. Okay. So thank you so much for everybody who joined this live stream. I will see you after 2 days. 2 days is my holidays. So tada, bye bye.